I think it's clear that the consumer's in really good shape, and both from a liquidity perspective, they have more cash than they did, even pre-pandemic in a lot of cases. And you're starting to see activity levels pick up as the vaccine rollout and the economy and states start to open back up. So while it's still really early, I think in that recovery, I think you're starting to see some really good signs, which should set up more activity for the second half of the year.
The shares kind of picked up during the call when you were able to kind of keep guidance where it was or tighten the range, as it were, particularly for NII and loan growth linked into that. What gives you confidence that the second half of the year or the next 3 quarters will allow you to kind of make up that initial guidance?
Yeah, well, let's start with the quarter, because underneath that, there are 3 or 4 things sort of happening that I think help, maybe with the story. First is, we are seeing economic trends improve, and we're seeing that come through a number of fee lines in our business, in the home lending business, the investment banking business, the asset-based fees in our wealth business, all up, solid double digits year on year. You're seeing credit performance be really good, both on the consumer and the corporate side or the commercial side, which I think that's in part due to forbearance, in part due to a lot of the stimulus that's been injected. Offsetting that's been the NII, the impact on NII from lower rates, which you were sort of getting at there. But overall, we feel really good about where we stand in terms of capital, liquidity, and sort of how that positions us, for the future. As you sort of think about the second half of the year, the trends are improving, and the likelihood that we're going to see a robust economy in the second half seems to be increasing. And as you look at, whether it's the consumer, as we just talked about, you look at, the overall sort of job creation that's starting to happen, all that should set the second half up to be pretty robust from an economic perspective. And with that should come some more demand for loans, particularly on the commercial side. So we're hopeful that comes as the recovery starts to gain momentum.
Shepard Smith here. Thanks for watching CNBC on YouTube.